Welcome everyone to Vested Interest. This is Shane back with the weekly portfolio update. We did add $1,542 to the portfolio. We will take a look at what we spent that new capital on, any dividends paid, any options that we played in this week as well. But before we get into that, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. And for those of you who may be stopping by for the first time, on this channel we focus on dividend growth investing, buying stocks in good companies that pay growing dividends and hold for the long term. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible. So it really boils down to consistently investing, dollar cost averaging in dividend growth stocks, whether that's weekly, monthly, quarterly, once a year, whatever you can do, and growing companies with positive cash flow that covers the dividend and that have a high return on their invested capital. I cover all of my investment and activity in the portfolio on this channel every Sunday morning. That's what this video is. I do not have a paid Patreon account, paid paywall you've got to go to access anything that I'm doing. We all have enough to pay for, so it's free to see what I'm doing in my portfolio. Again, every week, Sunday morning at 7:30. But if you would like to help, hit that thumbs up down below if you are a dividend growth investor and if you find value in the content. Subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community and hit that notification bell down below. Ring that notification bell so you're notified whenever we put out any new content. And drop a comment. Let me know what dividends you were paid out for the week. What did you buy if you added anything to the portfolio? And do you do options? What positions are you running options on? How is that going for you? Would love to hear from you. I do personally respond to the comments down below whenever I have some time. So I'll try to get back to you whenever I can. Now that we've got all of that out of the way, let's jump back into the video. Now, first up is the options. We did have a couple options play hit this week, $50.90 total. All the options were entered on Monday morning on the 4th there, March 4th. So we sold to open one cash secured put for Bank of America, ticker BAC. This is a financial company or a bank out of the financial sector. It was a $33.50 strike price. We received 12 cents per share, right? One contract is 100 shares, so multiply by 12 cents, that'd be $12. They keep $50 fee and 5-cent fee, so really 55 cents in fees. So we received $11.45. Again, one contract for 100 shares, cash secured put for Bank of America with an expiration date of March 8th, $33.50 strike price, 12 cents per share equals $12 minus the fees, $11.45 in options premium. And we had one other contract that hit, right? Sold to open, same thing. We always sell covered calls or cash secured put here. We don't buy any. One cash secured put for Nutrien, ticker NTR. Same expiration date, March 8th, $51 strike price. That's the strike price. 40 cents per share on this one. So minus the fee would give us $39.45 in options premium. All total here with the two contracts, $50.90 in options premium. And the results on the expiration date of March 8th, so that would have been Friday, the cash secured put for Bank of America expired worthless, so we kept that $11.45, and the cash secured put for Nutrien expired worthless, so we kept that $39.45. And we will look to run this options play again, probably the same two companies. We had a couple other, Pfizer we had out there, that one didn't hit. I think we had some out for trying to hit on MPW this week. That one's starting to run up a little bit, so I was trying to run a little bit more options on that one. But they didn't hit, so these were the two that hit, $50.90. That's just the way options go. You can write an options contract, but it requires a buyer on the other end, or if you're buying options, a seller on the other end. In our case, we just sell options. So $50.90 in premium on March 4th. Now, also on March 4th, we received some dividends from Enbridge, ticker ENB, out of the energy sector. Now, this is a Canadian company, so there are some tax implications. My brokerage takes the tax out right away, so I don't have to worry about that. Make sure you understand how your brokerage treats foreign companies, because you may be responsible for the taxes at the end of the year if they do not take out the taxes for you. So Enbridge, they paid us $116.88. We have the drip set, so dividend, that stands for dividend reinvestment plan. Basically, that means anytime a company, in this case Enbridge, pays out dividends, in this case $116.88, those funds automatically go back in and buy more shares of that company. So we picked up 3.37031 more shares at the $1.67 strike price. These new shares paid for by the dividends added an additional $9.07 in passive income over the next year. So that is that dividend snowball in effect, right? I've already paid for shares of Enbridge. Those Enbridge shares pay out dividends. Those dividends buy more shares. Those shares pay out more income over the next calendar year. That is the dividend snowball in effect, right? So that was March 4th. On March 5th, we also received dividends from Johnson & Johnson, ticker JNJ. This is out of the healthcare sector. They paid us $130.27. Those funds went right back in and picked up 0.8128 shares of Johnson & Johnson. Not quite one full share yet, getting pretty close right now. And that 0.8128 shares added an additional $3.86 in additional passive income over the next calendar year. Now, finally, to the first buy of the week, also on March 4th, whenever we were doing options, we also went ahead and bought some new shares here. We added $976.90 to the portfolio. With those funds, we picked up 6 shares of Comcast Corp, ticker CMCSA, out of the communication sector. This is one I'm building out, trying to get to 100 shares. Currently, I think I have 20 shares on this one. We picked up those shares at $42.28 per share. We picked up 10 more shares. I've been adding to this position for a while of Alibaba Group, ticker BABA. This is a Chinese company, so I understand it. If some of you are against buying, foreign companies or Chinese companies in general, that's your call. But I am adding. I feel they're pretty cheap right now. We picked up 10 more shares there, $72.33 per share. And this one, I'm very close to having 100 shares. I'm going to get it to at least 100 shares and then probably back off. Really focus on Comcast, getting that to 100 shares, then back off. And then we will just start allocating capital across the portfolio. Well, I did just add one other position as well. So once we get Comcast to 100, we'll focus on the other one. We'll see that here in a minute. These new shares that we bought with this $976.90 added $17.44 in passive income over the next calendar year. And the last day we bought anything, that should say March 8th. March 8th was another $565.44 added to the portfolio. With those funds, we picked up 1 share of Medical Properties Trust, ticker MPW. This is a REIT out of the real estate sector. Picked up that 1 share for $4.51 per share. Picked up 2 more shares of Realty Income, the monthly paying REIT here, ticker O, another one, real estate company out of the REIT out of the real estate sector. $52.83 per share on that one. We added our weekly buy. This is going to be 1 share of SCHD, a dividend growth ETF here at $78.85. And again, we're going to add 1 share regardless of what the price is every week this year. AWK, newest position in the portfolio, ticker AW, American Waterworks, ticker AWK, is a utility. This is a water company, right? They do wastewater treatment plants. They provide water. They are a water utility. We picked up that 1 share at $119.17. And this one, so we'll try to build this one out. That's our first share, right? So we can buy this one up to, I think, $130, $131 per share. So we're going to try to get this to 100 shares. We might not get there before it runs up before that, but that's all right. We're going to build this one out over time. This is not one I'm, trying to run to 100 shares as quick as I am with BABA and Comcast. But if I can get there under, 15% of its 52-week low, which would be around $130, $131, I will run it all the way to 100 shares. At least 100. And our other weekly pickup, much like SCHD, we're going to add 1 share of Vanguard Total Stock Market ETF, ticker VTI, and that's exactly what this is the whole United States stock market in this one ETF. Over 3,000 positions are held within it. Ticker VTI. We picked up that 1 share at $257.26. And same thing. Whenever I get on the computer on Friday and look to add my final weekly purchases, most likely, I may look throughout the week because I could have got this, I think, in $249, $250, a little bit cheaper throughout the week if I'd have bought it whenever it kind of pulled back a little bit. Same thing with SCHD. I think I could have got this at 77, 70, low 78, a little bit cheaper. So I might not wait till Friday to pick these up, but I am going to add at least 1 share of each of these every week. Passive income added from these additional shares picked up from this $565.44, $10.65. Total invested $1,542.34. Total passive income added, that's with the dividends. So with the new shares that I purchased this year with the new capital, or this week with the new capital, as well as the shares picked up from the dividends paid out, added $41.02 in additional passive income over the next calendar year. Now, quick run through the sector weights of the portfolio. Communications sitting at 9.01% of the portfolio. Consumer discretionary makes up 4.72%. Consumer staples at 11.69%. Energy makes up 6.29% of the portfolio. Financials at 8.21%. Healthcare makes up the largest chunk at 16.15%. Industrials at 7.64%. Technology sitting at 7.52% of the portfolio. Materials at 11.64%. Utilities at 4.39%. REITs and real estate at 11.24%. And ETFs, still the smallest slice at 1.51% of the portfolio. Over here on the right, you can see the sector weights broken down by position again, or percentage again, but also by how much funds I have in each allocated sector as well. Now, what a lot of you like to see every week, this is the portfolio update, whether the market's up, whether the market's down, whether the market's floating sideways, and whether I am up or whether I am down or floating sideways. I am going to show you this every week. I want you to see how a real portfolio is built out over time, right? I am not a financial guru. I did not go to college for trading stocks. I'm not, a broker. I don't work on Wall Street. I'm just an average guy, goes to work. I'm married. I have 2 daughters. And if I can build out a portfolio, I am learning over time. So you're going to see the mistake. If I make mistakes, you're going to be able to see them. So that's one of the downsides to being sharing open and transparent like this. Whenever I make a mistake, you're going to see it. So be kind to me. I'm not a professional, and I do want you to see that there will be mistakes along the way. Like, you can see a lot of green, but you can also see a lot of red. I look at a lot of the red as buying opportunities. Unless something has fundamentally changed with the company and I have done my due diligence and made sure they're a good company with good fundamentals, whenever I see red, I should be willing to add to them. Now, there are a couple that are more speculative than others, or could be more riskier than others. MPW definitely fits that bill. So I understand if some of you are risk averse and prefer the ETF way, VTI or SCHD or VOOO, where you just buy an ETF and don't worry about individual stocks. That's one way to do it. I'm doing that, as well as picking up individual stocks, because that's what I like to do. Now, here in this column, you'll find the ticker, how many total shares I own, the current price as of the close of business on Friday, market value, again, as of the close of business on Friday, my average cost per share, how much I have in funds in each position. The previous slide you saw how much I have in funds in each sector. This is by each position. Total return, whether I'm up or down, you're going to find it in this column. Percent up or down, you'll find here. Sector weights, what sector each company falls in, quarterly dividend, monthly dividend, or semi-annual payer in these columns. Current dividend yield as of the close of business on Friday. My yield on cost, what the weighting, the portfolio weighting of each individual position you'll find here. Again, on the previous slide, you saw the sector weightings, or the weightings, the percentage of weightings by sector. This is by each individual position. Estimated annual income here, what months they pay out, and their dividend growth. So I've talked through this a little bit. There are a couple positions in here, like Kraft Heinz, excuse me, that I've been holding for a couple years now, and they have not started growing their dividend again. So I am really considering selling out of Kraft Heinz and rolling this into General Mills. I've been watching it. Looks like it's popping a little bit, so I hope it doesn't run up on me before I get a chance to do that. This was another position I was trying to run some options on as well to try to help bring in a little bit. But I really am considering selling out of Kraft Heinz. They have not raised their dividend in a couple years. I've had them for almost 3 years now. Still are not raising the dividend, even though it has a 4.5% dividend yield. I am looking for dividend growth in General Mills, even though it only has a 3.6% dividend yield. I think right now around there, it has about 9% dividend growth. So I'm looking for more dividend growth. I have too many positions that aren't growing their dividend. OHI, I knew that going in whenever I bought it, but it was at an 8.7% dividend yield. So I look at this as more of a CD type of, with a little bit of price appreciation from the stock price. I know I'm not going to get any dividend growth, but I can deal with that if I'm getting an 8.72% dividend yield. My yield on cost is actually 9.3%, right? So I can deal with no dividend growth if it's sitting at 9.3%. Some of the other ones here, SBSW, they recently dropped their dividend down. So that is part of the reason this looks like it. The one in the beginning of the year is typically higher, and the one in the end of the year is typically lower. So this looks like it's going down, and it's a cyclical company. So it never typically has just straight up dividend growth all the time anyway. It's going to range depending on what the spot price for metals is. And I knew that going in as well. So that one I'm not as concerned with. It's the ones like Kraft Heinz that pay dividends quarterly. And when I bought them, I thought, okay, they've suspended their dividend, but they're gonna or not suspended it, but stopped growth on their dividend. But their plan is to increase that growth in the future. Well, they just haven't. They haven't started that growth yet. In 3 years, in my opinion, is long enough to wait. So let's run through the rest of this real quick. Total current shares 6,117.283 shares. Excuse me. Market value is $219,770.83. I have $212,169.35 into the portfolio. Total returns $7,601.49, up 3.58%. I'm not as concerned with being up or down here. I don't, it's great to be up, but it's not my focus. Current yield 4.444%. Yield on cost 4.603%. And this, see this red circle here? That's why I circle in red. This is what I'm focused on. The passive income, the dividends paid out on an annual basis by all the positions in the portfolio, whether I'm up, whether I'm down, whether I'm floating sideways. This continues to grow week over week, month over month, quarter over quarter, year over year, and currently sits at $9,766.74. And by the end of March, I'm going to be very close, if not over, that 5-figure mark. Should bust through that 10,000 mark and beyond once we get through. But that's the next milestone. By the end of the month of March, I think I'm going to be just over $10,000 in annual dividends paid. Dividend growth is up a little bit. The adding in AWK here with the 8.02% dividend growth did bring up my dividend growth a little bit to 4.76%. And I did play around with KHC. If I was to drop this out of the portfolio with 0% dividend growth, add in General Mills, which is at 9% dividend growth, that would bring this up to almost 5% dividend growth. So I am seriously considering that. That is one of the changes I'm looking at in the portfolio, possibly selling out of Kraft Heinz and rolling it into General Mills. Let me know if you are doing any repositioning in your portfolio, selling out of any positions, or what positions you are looking to add to your portfolio. That is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, hit that subscribe button and join the channel. Join the vested interest community. Drop a comment down below. Let me know what you think. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you have a great week, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and can lose money and should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice of a certified financial advisor.